Welcome to the Fitness and Finance Podcast with Jeff Smith from the Retirement Smith and Jennifer Scherer from Fredericksburg Fitness Studio. True wealth isn't just about finances. It's about maintaining a healthy body and a secure financial future. The Fitness and Finance Podcast is here to help you build strength in both areas, tackling financial strategies for retirement while also discussing ways to stay active, healthy, and energized. Now let's get started with Fitness and Finance. All right, here we are. What a great intro. I still haven't gotten over how much I love that intro. Jeff and Jennifer, you guys look great in that intro. That's awesome.
I want that music in my head like all the time.
Yeah. Yeah.
I want that to be my soundtrack.
Yeah. Yeah, I talked to our video editor. I said, make sure you get a nice shot of Jeff from behind and freeze on that for a minute. I noticed that in there. That was great. But seriously, that's a really nice intro. And we've got a very special show. You guys, what a huge get for the show today. I'm your co-host, by the way, Tony Shore. I'm here with our hosts with the most, Jeffrey Smith and Jennifer Scherer. You guys talking about fitness and finance.
Yeah.
Tell us about our very, very special guest on this special episode.
Well, Melissa has been a friend for years and years, and she's an amazing mortgage broker here in Fredericksburg for CMS. And we met, 2008, I think, somewhere around there,
2011. Thanks for giving me those extra few years. But yeah, 2010.
Yeah.
2010, 2011, around that time.
Melissa is a yogi, and very, very accomplished in her life. Has a wonderful family. Jeremy, her husband, and Maddie and Logan, her children. They're a wonderful family here and great part of this community. She's one of the best there are out there for lending, and so we're very happy to have her. We love when situation works for what we talk about, because we want to talk about finance and we want to talk about fitness. Those are two areas that Melissa's been doing for a long time. So very excited to have you, as always. Thank you for being with us.
It works well. Thank you. No, this is an honor.
Yeah.
Let's have some fun.
Absolutely.
I should have been upside down when the camera.
Oh my gosh.
I should have found a way to flip you upside down.
Find a way.
We can do it. Watch it. Let's do it. Let's do it.
I can do a headstand on that desk like right now.
I think at some point before we end this thing, you should definitely do that.
Yeah. Done and done.
Show.
Done and done. Easy peasy.
Yeah.
Say less.
I love it. But yeah, we wanted to talk about a few things because honestly, there's a lot of stuff happening. We've got the Fed with tinkering a little bit with the rates. We have pressure from the administrative branch to lower those interest rates. There's a lot of things going on, and I would love to get your take on the sort of the state of where mortgages are. Is there a bottleneck in the economy because of the interest rates, or are things loosening up? Thousands of questions, but I'll let you kind of touch on where you want to go with that.
Yeah. Well, what I will say is we're way better than we were from an interest rate perspective. Depending on what type of loan you got and who you used, I mean, rates were pushing almost 9%. That was primary resident. I personally didn't sell those. I had access to I'm a broker and was able to stay. I mean, maybe we popped up over 8 for a hot minute, but yeah, we were solid in the 7s for a while, and now that we are, and when I refer to interest rates, I'm just as a side note. Most people fixate on the conventional 30-year fixed. So, so when I'm referring to something like that, that's the number that I'm referring to. There are other types of loans, but if you're looking at the conventional 30-year, we're now, I've solidly been selling in the high 5s for a decent amount of time now. I know market average is still low 6s for your 30-year conventional with a good credit score. But that is well below where we were. So I will say that everybody keeps saying, we're going to wait till rates go down. We're going to wait till rates go down.
Right.
They've gone down. The bottleneck that you refer to, I see, is rates I feel could soften a little bit, and that would help. I would like to be more in the healthy fives, the mid to low. I think that's a happy place. I don't believe that rates are necessarily the problem. Affordability is blown out for multiple reasons. We had prices expand over and just get out of control during the pandemic, what I call the FOMO period. Everybody wanted to buy, if they had a house, they wanted to buy two more, it seems like, because money was basically free.
Yep.
So by way of lower interest rates. So prices skyrocketed. Very, very, closely how much of an increase we saw in homeowners insurance. Gosh, we could do a whole podcast. We could do a whole other session on why that is. And so you have insurance rates going up. I've seen, taxes are going to go up when the value of the home goes up, but the municipalities have been pretty good at tempering that and not payment shocking people on that. But that's the nature of the beast as well. So I don't believe that rates are the problem solver here. There's a lot that goes into affordability that I don't know what's going to fix it.
Well, I think inflation, helped a lot in that area. And then, as that comes down or stabilizes, I think my primary concern for most people, is where their income, did their income increase with all the expenses, right? And I think that's what you're really getting at for the affordability piece, because I don't think income has kept up necessarily with inflation and with rates. And so you're coupling those things, and it leads to people using credit as an extension of their income, right? So, and then that's also an issue potentially coming down the pike for securing a loan when your debt to income ratio is out of whack. And so there's a lot of things. We're gonna nerd out today, it sounds like, Melissa.
We are. Oh my gosh, it's my favorite.
I do have a question.
Yeah.
Do you think that there's like an income number or a credit score that would automatically disqualify, or do you think it's great?
Oh, I can't hear either of you.
Oh no, I might not.
I think she asked.
I can do this one.
Tony, I couldn't hear you either.
Could you hear me?
I can hear you now.
Oh, can you hear me now?
Yeah, I can hear you now.
Okay.
Okay. Is there an income number or like a credit score that you think would automatically disqualify someone, or is it way more nuanced than that?
Very nuanced and not really. So here's it's a really good question. Here is the thing about credit scores. We have expanded. We as an industry have expanded. We've expanded the offering to, in some cases, there's quote unquote no minimum, especially when we're talking about FHA and government backed loans. Doesn't mean that you're going to get an approval or at those low scores. We used to say 580 was the minimum. Now lenders will lend to you well below 580. Wow. Doesn't mean that just because you have that score that you're going to get a loan. When you have a score in that range, there's usually a reason for it. And if that item on your credit report is not an allowable thing to have and be approved, then boom, you're done. It also, if we're talking about financial fitness here, kind of going back to that.
Yes.
Just because you can get a loan with that low credit score, does not necessarily mean that it would be the right move to do it. I know that people have their own motivations, but it can save you hundreds of dollars per month, thousands per year if you can hold off and take the time, the 12 months or so that it would take to recover your credit score to the point where you're not paying exorbitant fees and rates because your score is so low. When just because you qualify with a low score, the lender's going to make you pay for it. You pay a much higher interest rate when you have a loan and a low credit score.
And that's how people get into trouble, right?
Mm-hmm.
Yeah.
Mm-hmm. So when I have borrowers that, I've been watching my credit for months and I finally hit that 580, let's say, and let's say it is a credit report that will pass the underwrite, we'll get an approval. I will show them the difference between here's your payment at 580 and here's your payment at 620 or 640. These are the lenders that we can use if you have a 580. Here's the lenders we can use if you have, 620, 640, or even better. So the better the credit score, the cheaper the loan will be for you. And it's sad because the people with low credit scores are the ones that can afford the payments less. There are exceptions to that.
Right.
Mhm.
But for the most part, if you have a low credit score, you're already hurting in some way or another.
For sure. So, and I think it is wiser to hold off, especially if you can't. I mean, talk about affordability. I mean, we live in a state that is already high. Housing is ridiculously high, and there's a lot, and things just seemingly get more and more expensive. Like you said, insurance in this state had been sleepy and behind and easy. Sort of, were lulled to sleep. These companies were lulled to sleep, and then they got hit with massive claims over the last couple of years. And the one thing that is good about higher interest rate environment for insurance companies, love that, right? So they can actually make a little bit more money. So as they were increasing rates, they're gonna have an underwriting surplus over the next couple of years because of the ability to invest in in higher producing short-term bonds. So I mean, there are some
nerd out part.
I know, nerding out totally, but I would love to get your take on what sort of the president's proposing. Not to get political, but how is buying certain bonds going to lower the interest rate, or is that something that you're not, that's not something that you want to discuss or
So it's a short term. I mean, it's been done in the past, and it was being done weekly, monthly. I have to look back. Certainly during the pandemic, it was also done during the housing crisis.
Right.
So you increase it's the supply demand rule, right? Now, and the inverse.
Yes. Let's use that term.
Relationship of price. So so you create more demand by buying more, and prices go up, yields go down.
Right.
Yield is interest rate. Right. So he's buying or proposing to purchase 200 billion in mortgage-backed securities. You increase demand, and the price of the bond goes up, and it makes the yield go down.
Perfect.
So that is a short, nerdy way of explaining that. If you want
I love it.
I don't.
So that's what you call inversion or an inverted yield. I've always heard that.
That's not the inverted yield curve. That's just the price, the just how bonds and interest rates work.
Right.
So we can do a whole other really boring, not entertaining class
inversion
on rate and price. So return and price and why as it's
right.
It's a little bit
short term when short term rates or bonds are higher typically than a long term bond. That's an inversion. So that's completely oversimplification.
Yeah.
The yield curve is your interest rate on a shorter term loan. Let's call it a mortgage, right? Yeah. Shorter term loans, interest rates are typically lower.
Yep.
And then your rates on longer term loans are typically higher.
And when that gets inverted, then we're in the upside down, and then people start worrying about recessions and things like that.
And we're kind of close to flat now, but I mean it's so the benefit. I mean, on that note, a lot of people for financial fitness, I'll keep bringing it back there. A lot of people want to pay off their loans faster. Whether you agree on that or not, we can have a whole other talk about that. But people will want to get a 15-year mortgage versus a 30, not just because the interest rate is lower, but also to pay the loan off more quickly. The benefit of getting a 15 versus a 30 for the past few years because of the inverted yield curve has not been as great. So you're not saving as much in interest on a 15-year, or you haven't been. That spread between the 15 and the 30 hasn't been so huge that people have been pulling the trigger on that higher payment. You can turn a 30-year into a 15 just by paying more.
Exactly.
Yeah.
We always I always suggest the fact that the power to pay it off is just as good as paying it off. You know what I mean?
Yeah.
If you're keeping your cash flow.
Cash flow is king.
Yes.
Right. Well, I mean, also, it's funny because, there are people out there that say all debt is bad, evil. We've heard them on the radio. We know who that is. But there's, well, how could there be good debt? Well, my wife and our mortgage rate is 2.9%. Right. We've been in this house for 28 years. We would like to get in a one level where we can age in place. And we would like to have moved a couple of years ago, but because of interest rates and inflation, we've stayed where we're at because, and we would never use money we've saved in an IRA or retirement to pay off that mortgage because we're at now we've got it paid down. But even if we had more owed, I wouldn't, because why not use the bank's money at 2.9?
Right.
Because my money that I would use to pay that off, I can make way more than that in interest, right?
Exactly.
Yep.
Yeah.
That's you're
that is economics right
preaching
here.
to the choir.
Yeah.
Yeah.
One more thing before we turn our attention to the fun stuff, which is, upside down yoga.
Pilates.
Yeah, we have Pilates and
Fitbit. All right.
Tony. Tony's like, I don't even know. So, but as far as so we know that Powell is out in May. So sort of what my forecast is that things may change even more dramatically after May for interest rates. For whatever reason. So, why? I mean, I just, it's interesting that, the purchase, the mortgage-backed securities, at this timing when we only have a few short months before, possibly having a new chairman, Fed, who has a different outlook. What is your opinion on where we are with interest rates in general to the economy? I know that mortgage people are really in tune with this, and so I always love to get that opinion because it may be different than mine, and I would love to hear it.
Yeah. When I got into this business, the early 2000s, we were in that higher rate environment. So I started in finance in 2001. Got into lending in 2000. I mean, I guess in 2001, I was doing a little bit of lending via retail banking, but really not doing mortgage lending until 2003. And the ARMs were in the 6s and 7s.
Wow.
Those were the lower rates, and when I got into this seat originating, which people think I'm nuts, I started as a pure loan originator in 2009 when everybody was running away from the business. And we were still in the 5s and 6s. I remember the day that rates went under 5%. I was a brand new originator, and people were just losing their minds because rates were under 5. And so if we get back to that talk about we want our money to make money too, I think personally, I think a healthy place is somewhere in the 5s. I know people may not want to hear that, especially if they have the FOMO of they weren't one of those people that got a rate in the 2s. I understand that. It's easy for me to say because I was able to access a lending program in the 2s. I get that. I do not think that it is a healthy place unless we are in crisis to have money that cheap again.
Exactly.
No, because we need our money to be able to make money. And we also, when rates were that low, even in the 3s, and I would argue in the low 4s, that gave people purchasing power, and it drove up prices. So if we have your interest hurt just enough to make you think about the purchase. It put us in a place where people were making very careless decisions.
Right.
Very careless decisions. And one of the sticking points I have in my work is take this purchase seriously. You're financing hundreds of thousands of dollars. I want you to take my process seriously. If you lent your friend $200,000, and that's a drop in the bucket compared to the loans that we're seeing right now, wouldn't you want a bank statement? Wouldn't you want a W-2?
Right.
You know, so I've gone a little bit down a rabbit hole now, but
That's great. Good insight.
I think that a healthy place would be somewhere in hovering around 5%. But take that for, it's just Melissa Okrasinski.
No, I like that. I do like that. I think because, the higher the interest rate, the more, sort of bullish we are on the economy, right? I mean, I think that's the reality. But, so much is driven by the housing market, so much. And so, you kind of have to look at it like, hey, can this be a driver? More home ownership means more trips to Home Depot. More, people are working, and the most money is spent on buying a house. So,
Well, and another soapbox that I get on very often is that we need to have more of our population participating in the housing market. This is a horrible statistic, and I cannot believe what I heard last week. I have been saying for a couple years, I have to look up what the actual statistic is now, because your average first-time home buyer was mid-30s as of the past couple of years. It's pushing 40 now. That's not good.
Right.
And in my personal opinion, sure, values going up is we don't want to see our home values go down. And that's not what I'm proposing. But if we can't have young adults or just the greater population, more income variety being able to participate in the market, I'm not going to have a job.
Right.
So I would rather have the units, the participation, because then you have people that are bought in, you have people that really do care about their neighborhoods. But if it doesn't matter what the interest rate is in a lot of these areas, price wise, I have run numbers for people at let's just play with this and see if the rate was 3%, and they still don't qualify.
Right.
So there's
houses are expensive, and I think, like you said earlier, wages are stagnating a bit. We've seen a little movement there, but for the most part, wages aren't keeping up with housing prices. And my son and his wife, he's 26, out of college, went to grad school. Doesn't have a bad job, but he's got student loan debts, and they both work full time and still cannot afford to buy a house right now.
And
so, that's when Sarah and I, my wife and I, bought our first house, and we had our first home by then. And they've been married a few years now and are living in an apartment, and not a great one. And the rent is really high. So it's crazy. It's a tough time, and younger people are frustrated because they want that American dream like we had and my parents had.
Well, there's a fair amount that are still very comfortable living with mom and dad too. That is a generational thing.
Sure.
It is a generational thing that, I mean, and I think we've talked about this before too. A lot of the jobs that are, there's a bottleneck there too. I mean, there's a ton of, everybody goes to school for some sort of IT position, and there's only, 5 jobs for every, 100 people. And so they have to do something, that's a little bit different.
So Melissa, in that situation, like Tony was just mentioning, with his son, they can't afford really a house, right? So in that situation, how would you help that client, without technically being able to afford buy a home to support their lifestyle, right? Would it?
what I see people have no choice but doing is locating in areas that maybe they hadn't thought of living, maybe increasing their commute. I have a lot of young borrowers who are back to, I mean, Jeremy and I did it. We commuted, we had hellacious commutes when we were young adults, and that might be a little bit of character building. But I see a lot of young people doing that. But the car payments are pushing $1,000 a month now too for very reasonable cars. We're not talking about it's so that's what I've been seeing, Jen, is young people buying more out in the rural areas.
My daughter bought her house at 21, and it's in Orange, so it's a 30-minute drive into town. And I mean, it's a starter home for sure. But it was something she could afford. And I mean, I've talked about it before. She's in the trades, and she she doesn't have a lot of student debt. She doesn't have any. So there's a lot of there's a lot of though a lot more people are going into that or should be taking a hard look at it. There's going to be the biggest shortages, I think, in jobs are really, my sister told me that with 30,000 job shortage for pilots, commercial pilots in the next 5 years. I mean, that's something you don't necessarily have to have a 4-year degree to do. And you can take courses and become a pilot, and then the trades. I mean,
I've seen that start to the popular, just having teenagers, that it's it's a popular conversation. It's good to see.
Yeah, it is nice. And then, I think, we need to bring sort of dignity back to the trades, and, that it is a viable position and needed. And
I look at those pay stubs. They are nice looking pay stubs.
Absolutely.
Yeah. I know what I'm paying my plumber to be. I mean, that's a lot. That's good money.
Yeah, sure.
Electricians, plumbers, things like the trades are. They were too neglected for too long. We focused on, I want to be a lawyer or a doctor. I need to go to business school and be
the IT profession, like Jeff referred to. There's a lot of that.
Yeah. All right. Well, let's talk about the fun stuff. I think we're going to get a demo from Melissa doing what Melissa does. But I tell you what, I love taking her class. She teaches a 9:30 class at Dragonfly downtown.
Is it a yoga class?
Yeah, hot yoga.
Hot yoga class.
Hot yoga. Wow.
She teaches other than that, but that's the class that we like to attend when we can. And I'll tell you what, that's an intense class. So
share with us your story, Melissa, how you got into it.
Yeah.
So I will say first, if you take my Friday morning class, I don't ever really teach inversions in that particular class. So don't be afraid to take my 9:30 Friday morning class.
I love it.
But yoga came into my life, interestingly enough, when I was pregnant with my daughter in 2008. I was 29, almost 30, and I took my first yoga class with her in my belly. And I had just a little snapshot into my personal past. Before I was pregnant with her for a decade, I was on antidepressants and anti-anxiety medicine, and I had to go off of it when I was pregnant with her. So that yoga class was a part of that way to keep my mind calm, keep my body moving. I was always a big proponent of exercising. I was a runner in my past. And it was a way for me to keep moving. And little did I know about the mind-body connection back then. So after I had her, it was 2008. So a very interesting time in the financial world. We had the financial crisis then as well. Yep. Jeremy's job changed. I decided to go self-employed during a financial crisis. Had some postpartum, pretty significant postpartum depression and anxiety after I had my daughter. And interestingly enough, didn't go back to yoga after the birth. I did prenatal, but didn't go back to yoga. And so when I was right after I had my son, so I figured out life between my daughter's 3 years older than my son. And within those 3 years, we made a big move back to Fredericksburg. That's when you and I met, Jeff.
Yep.
And after I had my son, when I was 33, I discovered a studio down the street called Patayo. I was doing, it was a practice. It was a mix of Pilates, Tai Chi, and yoga.
Loved it.
And I really found my movement passion in that class, in that world. And that's where I got reintroduced to yoga. And there was a yoga teacher in that space. And the owner of that studio was also a Pilates machine, like a human Pilates machine. But anyway, encouraged me. I had never had core strength. I was a runner. Or maybe I had never tapped into my core strength. There was a yoga teacher there that encouraged me to do my first handstand in a private one-on-one lesson.
Nice.
So at this point, I'm 35, 36. So what year was this? It was probably
last year.
2015. No. So 2015. Gosh, I was 37. So anyway, did my first handstand ever outside of maybe cartwheels on the beach when I was 36 or 7.
Oh gosh. All right. We can edit that out.
You can edit that out.
No,
so started, wasn't really sure if it was something that I liked. I thought that I was immediately horrible at it. And I thought she was crazy for introducing a handstand in a yoga class.
Yeah.
A couple months later, my best friend died of a heart attack at 37.
Jeez.
Suddenly.
Oh.
I did not want to go back on antidepressants or anti-anxiety medicine. No shade to that. It saved me for a very long period of time. But I needed movement to calm my mind.
Yeah, that's awesome.
And I just kept doing handstands everywhere I could go.
I don't understand. So is that what you're referring to as inversion? And what do handstands have to do with yoga or health or mind?
So they don't necessarily have to. You can be a yogi from, from toddler to elderly and never do a handstand. It's not required. Handstands, headstands, inversions in yoga are handstands, headstands, and they can be integrated into the practice. And
you've done that, and you found that helpful to do those.
Well, I think you have to think about the mental strength it takes to do that, not just the physical strength. It's something that what she's tapped into is that mind body, and that's what I'm sorry, I don't want to talk for it. I think that's pretty much what she's getting at is the intensity of trying to do a handstand or a headstand it takes a lot of mental fortitude to be able to do that.
What were this like? How did you start with a beginner level handstand and then progress to?
I'm interested. I have so many questions.
Yeah.
Was it first Alex, of course, at Patayo. I love that. I did it for a few years till she moved. Who was the instructor that did the
Jessica? Her name is Jessica. She her last name's Trombley. She blonde hair. She was there for a very short period of time and moved on. She's now in Maryland. But cool. She was. I did one-on-one sessions with her and rediscovered the practice in a way. And I will, Tony, to your point, the part of yoga that yes, I adore handstands and I love inversions. But what really spoke to me in the yoga practice is no matter what posture I was doing, the requirement of breath and presence that you need to be in these poses, whether you are on your 2 feet, sitting on your mat, the idea is to be very present in your body, and the more balance required, the more, and Jen, you can speak to this because you're a trained yogi as well, in all of your movement practices. If you don't have that focus, that mental presence, and physical presence, you're going to fall.
Yeah.
Um,
It's almost a state of, you say mindfulness, when that word is used kind of loosely, but
Mhm.
it's almost a state of coming inside of yourself,
Mhm.
right? So we don't really do that. And when we
No.
get in a room and it's very quiet, we are forced into an environment where we have nothing else to think about other than what our bodies are in need of, right?
Mhm.
And I think that's the part of yoga that is so beneficial for people, is because we live reacting to all these things. And even as a trainer, I'm telling my clients what to do and how to do it, and fixing their form and giving
Mhm.
them feedback. And, it's very deliberate and very, like, organized and regimented, right? And so in yoga, it's like you can let go of all that. There's no expectation. It's just kind of where you are and what your body need,
Mhm.
what your body needs. I mean, you can look at your instructor and be like, "Oh, wow, she can really get deep into that pose, but my body's not needing that right now."
Yeah, and it's not even the goal.
Right.
The posture itself is not the goal.
Exactly.
It's the movement in and out of it. It's the holding of it. It's the breath that you take when you're in it. That all. So the true, if I'm getting my philosophy correct, and this is my understanding and why I value the practice. The whole idea of the practice was to get all the exhaust your body so you can sit in meditation longer.
Right.
That's why yoga was created, was to do this
Interesting.
rigorous practice so your body can finally be calm and so tired from that rigorous practice that you could sit in meditation longer, that you could be flexible enough to sit in lotus pose for an extended period of time and meditate. And so it creates a stillness in the body just by way of that physical practice.
Yeah, what I'm hearing from you, from all of you, is that, and you said focus and balance, and that's one thing. Holding a handstand and learning how to do handstands, you really have to have good balance and focus in order to do that, right?
Mhm. And a clear head. If I am not on point up here, I can't balance worth damn. So it is much a mental game as it is a physical.
Yeah, I'm still back on the beach doing cartwheels. I'm just working on that. You just glossed over that. Well, sure, I did cartwheels on the beach like it was a daily occurrence, but never handstands. And I'm like, cartwheels on the beach. I lived near the beach in LA for a while, about 5.5 years, and I don't know if I ever saw anyone doing cartwheels. I was too busy watching the surfers and trying to figure out how to surf, which that's one of the hardest things to do in the world. I tried. I was not successful. I body surfed a little bit, or on the board, but standing up, that's
ball of wax.
yeah. Talk about needing balance. Wow. I mean, I thought, well, I skateboarded as a kid, so when I was young and in my 20s and moved to California, I'm like, I can surf. Nope. That's probably the hardest thing I've ever tried to
Young
do.
Tony Hawk.
There you go.
Yeah, not even close. Not even close.
You're just dropping some ollies and some kicks.
People might not recognize. I am Tony Hawk. People might not recognize me because I've really
somewhere.
I've really let myself go, and the camera adds about 100 pounds. That's what I always like to say.
Awesome. So Melissa, will you honor us with a handstand before we go?
I can't. I don't know if I have enough room to get into a handstand here, but
don't hurt yourself.
Watch this.
Oh, on a desk?
Is that a table?
Oh my God.
Oh,
look at it. Only on Fitness and Finance Radio.
I love it.
How awesome is that?
Wow. Wow.
So cool.
Wow.
There you go. Headstand on the desk.
So, real quick, Melissa, I gotta know. With yoga, those inversions, there's I've read that when your heart, or when your head is below your heart, that inversion, it drains like lymph and toxins, and
that's what they say.
Parasympathetic. Do you feel that calming after you invert like that?
You know what's funny? Yes, and when we're in teacher training, we learned, and gosh, I feel this, and you've probably felt this as well. You would think that heart opening and back bends would be the calming part because it's the stretching out, but inversions are considered the postures that calm you down, and back bending brings the energy. You know, you're opening up. You're creating more energy with back bends. So absolutely. Inversions are to calm, back bends are to invigorate.
Wow.
That's neat.
So
Very
cool.
neat. Yeah.
Wow.
Do both at one time and you feel great.
I bet.
Well, hey, we actually have to wrap up. I'm sorry. We could go on forever. I'm sure that we'll be having Melissa back.
For sure. I want a part 2 on this because
Absolutely.
I have so many more questions.
Yeah, we're gonna bring for part 2. We're gonna bring Jeff out of the shadows, and we're gonna work on that lighting, and we'll actually, it works great for it to if you're together that close on the couch. The mic works great.
Yes,
we didn't need the extra mic that wasn't turned on.
Okay.
But great show today. And Melissa, wow, I got a lot out of this. This is great. I'm gonna try to find a beach soon. And I'm gonna go south and try to find a beach and try to do cartwheels and then handstands. So, but seriously, a lot of great financial advice regarding mortgages, and a little bit of talk about yield curves and interest rates. And Jennifer, we're going to let you do more talking on the next show. That's for sure.
Sorry.
No, that was great. I was learning. I had my learning hat on.
That's good. I always have my learning hat on. Yeah. You know me, I'm like a pizza. It's hard. I got to focus. My neighbor does hot yoga and he's invited me and he says it's just changed his life. So I might try to ease into that.
Hopefully you've been
we need some B-roll of that.
Yes.
Yeah, you know what? You're not gonna. There will be no filming or video of that.
I just want to know what the questions would be that Tony asks while he's doing it, and then looking around to see if he's like doing the right things.
Well, the first question is, will I have to eat kale? That could be an elimination question for me.
Now the clients that think I'm obsessed with kale now. Thanks, Tony.
Tony, you don't.
They look at me and they're like, "Oh, there's the kale girl. She loves kale." Thanks, Tony.
Well, you guys showed a picture of you made your nephew sitting on he's sitting there with a bowl kneading kale. You got to knead it and then it tastes better. It's like, man, if you have to knead a food before it tastes better.
Kale?
Yeah.
Massage it.
Massage the kale.
So it's not so like
with an acid, like with
rigid?
vinegar or lemon, it kind of breaks it down. Yeah.
Wow. The things we learn on this show, it is unbelievable. This show is such a valuable resource to people who want to actually be able to stomach kale. All right. Melissa, thanks. And we'll wrap it up. Hey, Jennifer, let our listeners out there know how they can get a hold of you and Jeff if they're interested in the fitness aspect or the finance or hopefully both.
Yes. So visit our website. It's fitnessfinancepro.com, and you'll see the link there at the top of the page to book your discovery call with either one of us or both.
All right.
Yeah.
Awesome. Fitnessfinancepro.com. And that does it for today's episode of Fitness and Finance Radio with our host, Jeffrey Smith and Jennifer Scherer, and our special guest, Melissa, who will be back. Thanks.
Yes.
I will.
All right.
Thanks, guys.